Alright guys, what's good? Today I'm going to be going over my strategy. Basically it's the break and retest. Before I get into it, let me just tell you a quick brief of my journey. So I've been training for 3 years. I've been doing ICT mainly the whole way through. The beginning I was doing like some sort of retail strategy, supply and demand, all that. But ICT was going good and honestly I loved it. But the only problem I found with it was that it was just really inconsistent. Like you'd have to change models every single month. So yeah, that's why I switched to something that's way more consistent. It's been working throughout the whole 3 years of trading. I've known that it's working. Anyway, let's get straight into the technicals. So with this strategy, it's literally break and retest. I know it sounds so super simple. It's simple, but it's got some stuff in it. So yeah, let's start on the daily time frame as we always do. So on the daily, what we look for is literally just our daily bias. To be honest, I use ICT concepts to find my daily bias pretty much most of the time. And it's also just like experience in the markets, just knowing where it wants to go. So I'm not going to touch too much on that, but over here you can just see that we've done a chart right here with displacements. So we're probably looking for sales, and we're also breaking this structure as we talk. Yes, we did liquidity sweep it or inducement it, but we are just moving down, so we want to look for shorts, to be honest, and we did mitigate this bearish FEG. Moving down to the 4 hour, what we want to look for is some sort of like key level. A key level is basically, it's really simple. It's like a level where price taps at least twice, or where price breaks and then taps it again. So let me just show you some examples. Over here, price taps it once, twice, so this would be a key level. So when price reaches this level again, you would anticipate buys, right? As you can see, it happened. Or you could just call it support and resistance, whatever you want to call it. Break and retest level is, let me just find an example for you. So this would be a key level right here as two taps right here, as you can see. This is on the 4 hour, by the way, so there's 2 taps, 1 and 2. So you mark it out, and then when price comes back, you're anticipating it to go up, right? But no, it just breaks right through. So when it breaks right through, you want to see it turn into a resistance. So this is what it does. It breaks right through, comes all the way back, and then shorts from it. So this is essentially what we're looking for on the higher time frame. Let's go down to the hourly. Let me just find you a good example of a trade I took. So here you can see on the hourly, 1 tap, 2 tap, 3, 4 taps. This is a really nice strong level. So I marked this out. I forgot what day this was on, and then it fully just ran through it. This was at around, yeah, like look at the time right here on the bottom, around 2 or 1. So this was my trading time. So scroll on to the 15-minute. You go to the lower time frame because you don't want to be trading high time frame, obviously, because that's just going to be really long. So I can see that it broke past my key level. Yeah, as you can see here. By the way, when you draw key levels, it doesn't really matter like how precise you do it, but you want to have it quite tight, to be honest, that it fits everything. So it broke past it. By the way, in future videos I'll be going through these concepts in detail, so but this is just an overall. So it breaks past it, and then I wait for it to come back, right? So retest of this key level. So it's a support broken into resistance, break and retest. So once I have this retest, by the way, I'll go down to the lower time frame. The 5-minute is the lowest I will ever go. I won't go lower than that. I've been trading for about 2.5 years on ICT. Literally most of my time has been on the 1-minute. Yes, I had higher time frame confidence, but being on the 1-minute, it's not that nice. Like the amount of times you get railed. Anyways, to the entry model, what you do is remember this was on the 15-minute. It tapped back into my resistance, right? So now I'm looking for some sort of confirmation to come down. So what I wait for is a church. A church is basically, you can call it what you want. It's basically a market shift for you ICT guys. But a church is basically the last leg up, which comes into the block or takes liquidity that needs to be broken with the body. I'm not going to fully go into what it is right now in this video, but trust me, I will later on, and you guys will get a better understanding of it. So once I see the chart, which is right here, I'll mark it out and then wait for a body closure. It's key that I need a body closure because wicks do the damage and then bodies tell the story. I think something like that. I don't know where I heard that from, but yeah, you don't want it to wick or go below it, but you want the body to close below it. That is the true church essentially. So once I saw that, let me just get my short position out. Literally enter the short there, stop loss above the high, always above the high, and then for me, I always do a fixed risk to reward of 2 RR around there. And yeah, that's pretty much the trade. Let me just quickly show you some other support and resistance or key levels, which I do just for eye training. But you guys also need to go away and backtest it yourself and go and pick it out in the chart yourself. It's just very good for eye training. Let me go on the hourly. So look right here. There's one tap. This is you can also use key levels like when there's consolidation. So you can see this little bit of consolidation when it either breaks out or when it basically breaks out, you want it to tap back in. So you can see this. I'm just going to mark the bodies. I would do the wicks, but in this case I'm just going to do the body to the body. So you can see that it perfectly breaks out of this consolidation range with nice displacement because of this FVG, this imbalance. I'll go over what displacement in it is in another video. But it breaks out, taps back in, and then look at these nice shorts. This is on the hourly. Look at these nice shorts. Taps all the way back in again. Another set of shorts that you can take. Another example right here. Here's one tap, two tap. On the third tap, you could have taken your shorts. Look at that nice dump. And then in trends where it's like fully trendy and it's not like this, you know, like nicer price action. When it's priced like this, what you want to do is you want to trade like 15-minute break and retest patterns. Well, not patterns, I don't want to say patterns, but just take a look at this. So you mark your first point of interest, which is here. Wait for it to get broken, taps back into long. Wait for your high to get broken, taps back into, and then long. So it's basically in these trending markets, you wait for the highs or the lows to get broken with displacement and then taps back into, and then find your chart and then enter basically. I kind of like these markets, but I do prefer the other ones. They're just much more fun, you could say. These are like nice, easy, boring trades. Anyway guys, that pretty much wraps up the video, so yeah, hope you enjoyed.